Right, hello everyone, and welcome to the first in a series of videos about structure mapping. So in this video, it's just going to be a short one, but I'm going to break down this current structure that we have here, go over a few talking points, and kind of explain the overall swing structure versus substructure argument. So what we have here is some 4-hour swing structure. Now, what we're not going to do in this video is go back in price and look at supply and demand. We're going to keep the focus primarily on structure. As you can see, from this point onwards, we are trending in an uptrend. So I'm going to mark off the higher highs. Now, one thing worth noting about swing structure, and about any form of structure actually, if we're in an uptrend, the thing that matters most is the continual formation of higher highs. So if we were to break down this trend, as we can see that it's continually formed higher highs. However, we have actually at some points made lower lows. So you can see if we were to break down this structure, from this point, we have broken structure. And also from this point, we've broken structure as well. And if we were to also consider this, which kind of would not be right, it would be a full structure point anyway, you can see that this has also broken structure. Now, this comes down to the swing structure, and this is why it's good to look at things in waves rather than in determination of actually each individual small movement of price. So the reason the higher highs matter most is because obviously that means the market is still moving to the upside. That's not to say that if the market is breaking down continually and making lower lows over the swing structure, that you should ignore that and just keep buying. But if we were to consider each wave of this trend, we could say that this was our first wave. We could say that our second wave begins here, moves all the way up to here. And then we could say that our third wave would be, this move potentially, and then the next one as well could be from here onwards. So the reason that it's good to look at things in waves is because if we look at this structure here, the complicated bit of structure, so let's clear this off real quick. If we were to focus in on this complicated piece of structure that we've got here, we would be getting caught up in whether or not this is in an uptrend or a downtrend, because we can see, well, we've made a lower low. Should we be selling now? We've made another lower low. Should we be selling now? But if we consider this was the final point of the first structure wave, and then this large push in itself is the whole push that it took to make a new meaningful higher high. So we could actually see that even though these middle point structures have broken, the final point, which is actually the major area or the pullback area of the first wave, has not been broken. And what this means is, rather than actually breaking through structure and turning bearish, all we have done is actually pushed through some of these minor levels, retested the demand at this level, and then continued moving to the upside. So from my perspective, and in my opinion, it's important to look at structure in terms of waves, right? We don't want to just be looking at, here's a higher high, higher low, higher high, higher low, higher high. And then when we break down even a small one like this, we might think, is this a lower low? And so on and so on and so on. We want to look at things in the broader picture. So we could look at this whole area to begin with. Well, in terms of waves, we could even look at this whole area. And then we could look at this whole area. And then from there, we could really look at, to be honest, this whole area of itself, because we haven't actually formulated any lower lows. So this could be another wave of structure. So if we just look at structure on the broad sense of the large moves up, then the larger pullbacks, the large moves up, the larger pullbacks, the large moves up. And then if we wanted to, obviously, as mentioned, we could incorporate this push up and pullback, and then the next push up as well. But really, if we start to look at structure in waves, we can kind of get around the confusion of whether a major trend has broken. Now, that's not to say that this break here is totally insignificant, because this break here can actually lead to substructure pull downs. But if we're going to be selling after this break of structure, we should keep in mind that we need to stop selling when we hit this point, because the market is still clearly, from a swing perspective, uptrending. So what we can look at this as a form of higher high, higher high, higher high, higher high, higher high. And we can see that this is clearly in an uptrend. If we then dig into these lower lows that we're seeing, we can say, okay, we've had a lower low, so we can sell, but we must stop at the swing point. So we could sell down to this point, then we could stop selling, and we could buy once again. Same here. This could be seen as a break of structure, this small break of structure here, but this has not broken the swing point. If we think about this phase of structure, we can actually see that this would be from the high to the low. So even though we've broken this substructure point here, once we come into the swing point, the demand at the swing point of that swing structure move, we could easily continue moving to the upside, as we have here. So that is just a quick map of the structure laid out in front of us. Now what I can do is start to break down from this point onwards and see what the structure does. As we can see at this point, we are in an uptrend. So if we consider the waves that we've spoken about, what could we look at? Well, we could look at this structure point for a break. If this was to break, we could sell down, but how far could we go? Now, as we've just spoken about, we want to look in waves. The previous significant wave is going to be this structure move that we are currently in right now. So if we did break this structure, yes, we could sell, but we would have to stop selling before this low is taken out. Because until this low is taken, the structure overall, this swing structure picture, higher high, higher low, higher high, higher low, higher high, is going to stay valid. So if we were to move down now from where we are, break this structure, we could look for shorts, but we will not sell any further than this point unless we break this structure. Now, if we break this structure, that will actually flip the whole bias of the overall swing structure in the market, because we'll see these higher highs and higher lows turning into a lower low for the first time significantly, breaking a significant wave, and then we could continue selling. But as mentioned, until or unless we break that, we must only sell down towards this area here, and then we should actually look continuing for buys. So let's allow the market to play out a little bit now. At this point, we've actually seen a push up, and this is where we can start breaking into swing structure. We've seen the push up, and now we've actually pushed down. So let's go down to the hourly, and I'll start digging into some of the substructure. That's the one, not swing structure. The whole swing structure movement is from this point here, surrounding this area right here. So we'll mark this as swing structure. That is bullish. The substructure move begins from around here and follows on to where we are now. If we want to drag that across to incorporate the other smaller substructure, you can see that here. Now our substructure range will at max go down to, let's say, this point here, because this is the demand zone. So our substructure now sits within the larger swing structure. So let's list this. This is our bearish substructure. Now, why can this only go to this point? Well, because when we get to this point, we will have filled all of the substructure possibility within this swing structure move. From that point, then the market's going to flip either one way or the other. We may come down and break, and that would actually break the swing structure, and then this would become swing structure, and we could actually open the doors to a larger push down, zoom back out to the higher time frames, and look for selling opportunities on pullbacks. But if we don't break that, the substructure will only come to this point, and then it will likely flip from this demand area. That's as far as we can physically go within the swing structure before it either flips back into the larger swing structure or breaks down into a new bearish swing structure. So by this point, we've determined the swing trend starts here and then can continue onwards. So unless we break through this low, we will stay bullish essentially. Now we have this kind of substructure area. Our substructure area that we have marked here is obviously the downside area, but we can also consider this kind of sub-uptrend as well. So there are kind of three layers to it. We have the overall high time frame direction, which is what we've been through previously. And when we zoom in, we now need to consider the kind of smaller swing move and then the substructure counter move that's going against that. So if we are to mark out the swing move, we can see the high is broken there, the high is broken here. So we are essentially in an uptrend. And at this point, we broke through and formed a new high. So the swing structure on the high time frame is bullish, and the swing structure leg of this movement is bullish. So what we can do is actually consider the options. Now, the options for us really here are, if we go to the 4 hour real quick, we are either going to react from this area here and push up, we will react from this area here and push up, or we'll react from this area here and push up. Now, whichever one of these happens, the market will essentially still be bullish because the swing structure suggests that the market is still bullish. Until we break this point, we can't really shift entirely bearish. But if we were to, for example, break through this low, we still could be bearish down into this point. And if we broke through that low, we still could be bearish down into that extreme point that we've looked at on the hourly. So now, if we break down the kind of movement that we've got here, we can see that the structure has indeed broken. So we do have a breaker structure. So for this point, from now on, we could be looking for shorts. But if we consider the trend here, it's bullish. So where do we want to target? Well, we'd only really want to push it towards this area here. If this whole area was to break, like past this point here, we could then start looking to sell through towards this area here. So primarily we are bullish, but we are obviously midterm bearish at the moment until we have got, our shorts in. So from this point, I wouldn't really be looking for buys because we have these open zones below, but that means we'd be looking at sells for now, but these are only going to be short-term sells. So our first sells coming in would be something like this. We could sell it from here, we could put a stop over the high, and we could target into this zone. So something like this would be our nice first shot at a short. So looking at price, we've gone and fulfilled that target following the substructure. There was actually another selling opportunity, I believe, and maybe missed. So we had lower low, lower high, lower low, breaking through this low. So then we would look for shorts from around this imbalance supply here, but as you can see, it did miss. So that wouldn't have been a trade there, but we did have the first trade, which has brought us into this zone. So now what we'll be doing, now that price is in this area, is kind of waiting to see whether it will react up or if it will push down. But until we break this low, we are not looking for sells. So the only trades that we would really be looking at from this point are buys, okay? Because obviously we are running with this larger trend. So we have the hourly trend here, agreeing with the 4-hour trend that we've looked at previously. So obviously selling is a bit silly until, of course, we've broken through more levels and opened more downside. So for the markets play out, we can see we've actually had a tap in here, a kind of break of the very low time frame structure. This is where you would go in for kind of confirmation entries. And from this point onwards, I would essentially only be looking for buys from where we are, because the 4-hour trend, the hourly trend, and now this lower time frame trend as well, this kind of hourly and lower break, also agrees with upside. So from here on out, I would only be looking for market buys. And as we can see, we are still continuing up. So I'm going to go to the 4-hour time frame and see if the swing structure continues, because really now there's kind of no point this substructure should continue down. We've gone and broken the high, so we've actually gone and formed really a higher high in that trend again. Okay, it's only minor, but it has pushed up. So now we kind of have our new swing movement, which would be load out here, and now anywhere above that point will keep us actually bullish for now. So the market could happily come and pull back anywhere within this range, but it's likely to actually push up. Now, if we consider imbalances, the probable point for reaction is probably going to be here. So if we were to get buy trades on personally, I'd be taking them from this point. So we'll let the market play out a little bit more. And as we can see, it works a treat. We've once again gone and broken into a new high, which suggests that we could indeed continue on in this uptrend, and obviously would have been a profitable position for us to trade. So that is structure mapping number 1. Hopefully that wasn't too complicated. Now, it is kind of hard to understand, but it is trading. It's going to be hard to understand. If you don't like it, unfortunately, sorry for you, but that's just how it is. It's not an easy thing to do. In terms of the structure, though, it is quite simple. Excuse me. We always want a high time frame picture. Our high time frame picture began all the way down here and actually came into these waves of upwards, downwards, and then upwards. And then obviously we had these smaller down moves in the middle. When it comes to substructure trading, which obviously we will do quite a lot if you are day trading especially, you will then zoom in and kind of identify, as we did in this area, what does this trend say from here on up, and how does that compare to what we're currently seeing? How can we trade against that, and when should we stop? When we make a new high, the same thing happens again. We have how is price reacting up here, how can we trade it back down, and when should we stop? Now, obviously, if this was to totally break down to the other side, we would then consider, okay, this might be a trend shift. So what I'm going to do is quickly break this down into waves and show you the kind of overall picture of what we've been talking about. So these can be seen as the 4 major waves of structure. The large impulse followed by the larger pullback, large impulse, large pullback, large impulse, large pullback, and then this one is really a rolling large impulse. So now we've gone into the kind of substructure waves as well. You can see we had the impulse here, pullback, impulse, pullback, impulse. This is where we had a bit more of a dramatic pullback with those substructure breaks of structure. So we had an impulse down, and then we had the major swing impulse, pullback, impulse, pullback, impulse, pullback. Then once again, where the substructure broke down, and then impulse, pullback, impulse. Now, looking at the structure, you can see these pullback moves never actually went further than the swing lows of the previous boxes, right? So notice the red boxes never go lower than the green boxes, basically that shows us that the trend is still intact to the upside. So this is where structure can get a little bit tricky, but hopefully this video has helped to kind of explain how to combat these situations. Remember those final points I spoke about earlier on? In an uptrend, the higher highs are more important than the lower lows, or the higher lows, should I say. If we do start to break out the swing structure and make obviously significant lower lows, for example, if any of these red boxes were to fall below the green boxes, that would actually signify a shift in the swing structure, and that is where we would then start shifting from the upside to the downside. But if the market continues to make higher highs and never actually breaks through these swing wave lows, as we can see it hasn't in this image here, then the market will continue to uptrend. And the same is true if we are looking at a downtrend. If the impulses keep making lower lows, and we do get these impulsive bullish moves, but they fail to break the swing structure points like so, then we are not going to shift our bias to the upside until obviously the swing structure breaks. So if this was to have extended this far, that would actually show a meaningful shift in the trend, and that is what we would then actually look to shift the direction. So that's all for this video. If you've got any further questions on structure, please let me know. I can do more structure mapping sessions, kind of maybe voiceover type things, or just play some music and run through structure as I go. These are kind of long-winded to make, so I won't be making loads of them all the time, but I will definitely continue to make them if they are needed. So thanks for watching, thanks for listening, and I will see you in the server.